Hello, 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 hello. Yo, what's up, guys? Yo, what's up, guys? What's up, guys? Yeah, let me hope everyone is fine. Actually, I don't expect anyone to be on my live for the first time. This is my first live, actually, and I'm just going to tell you guys about how my journey has been as a forex trader. I know you guys, it's not that easy. Like technically, it's not so easy when you're starting to be a forex trader. It's there are always ups and downs when you start trade forex, and right now I'm still in the struggling stage of being a forex trader. You know what I mean, yeah. So guys, right now I just want us to do some simple analysis. Yeah, I want us to do some analysis on the chart. Since I'm a struggling trader, I just want us to do some simple analysis. I tell you guys about my strategy because right now I am trading. I'm using the CRT strategies. I want you guys to go up, test my strategy, and do every sort of things. First and foremost, my best pair is GBP USD. That's my best pair. Yeah, I know most traders love that pair. It's GBP USD and Euro USD. Technically, I'm not a fan of gold. I would be so sincere with you guys. Yeah, I'm not a fan of gold, but uh, yeah, GBP USD, then gold, and yeah, I think that's it in the first place. So guys, as I was telling you, I want us to go. I want to make some analysis with you guys based on what. I'm sorry, guys. Something is taking up here, but okay. Based on the time I've spent in trading, I want to show you guys something I have learned. I know it may be that no one is on my life right now, but I'm expecting with time. I love this thing that always says maybe not today, maybe not tomorrow, and maybe not the next day. But only one thing is true: I will be champion one day. You get? So likewise, I will be champion one day. So guys, I want to okay to share with you guys my screen. I don't know. Yeah, screen right now. Yeah, let me hope you guys are seeing my screen. Okay, this is, as I've said, this my best pair is GBP USD. As you guys can see, this is my pair, GBP USD. Guys, just a moment. Let me first check if I'm live. I need to be sure that I'm live. Yeah, I need to be sure that I'm live. Just a moment, guys. Let me just switch to see if it's possible. Um, just a moment. I need to know if I'm live because no one is watching me right now. Yeah, yeah, no one is watching me. I know that. Uh, okay, let me see. Guys, a moment. A moment, please. A moment, please. Um, yeah, just a moment. Just a moment. Okay, I know you guys. With time, you guys will have to come and check on what I do. I'm sure with time I'll be a great guy, yeah. Because I know forex will make it happen. Okay, I'm just trying to see myself. Let me see. Time I'll be a great guy, yeah. Because I know forex will make it happen. Okay. So I don't know. Can you guys see my screen? Uh, anyway, no one is to tell me if they can see my screen. I don't know. And I can't also see it by myself, so I don't know. I don't know. I don't know what to do. But okay. Yeah. Yeah, right. My screen is there. My screen is there. Guys, I can see it. It's there. So yeah, I can see my screen. So I expect everyone to be in position to see my screen, guys, as you can see. Yeah. So everyone must be in position to see my screen. Wow. This is really interesting. Like so interesting. Like okay. Yeah. So okay, guys. That aside, I think we can go straight into our live. We can go straight into our analysis and see what's taking place. All right, guys. As I said, my name is Benjamin Bronze FX. Yeah, Bronze FX. I'm still a struggling forex trader. I'm struggling with capital, struggling with each and everything. But I believe with time, something has changed. Before the end of this year, I will say just like my mentor already says it. He's actually my role model. I said when he was starting, he said before the end of this year, I must be great. I must be one of the best forex traders in Uganda, and it came to happen. So, guys, this is what I'm expecting. By the end of this year, I expect to be great, and I mean it. By the end of this year, I'm expecting to be a great guy because I deserve it. Like based on each and everything that I've put into the market, I deserve it. Yeah? All right. So, guys, this is my pair. As you guys can see, GBPSD. That's my pair. Looking like that. Oh, just falling in love with my life. Yeah? It's there's a way it looks so good. However much it's kind of slow, but that's it. The time will be okay. So guys, I want to take you through my strategy in the first place. I told you guys I work with it's called the CRT, the candle range theory, and this theory is basically it's based on three principles. My theory is based on three principles. One of them being it's called the CRT. However much I modified it to call it the SMP, the SMP bronze bullet. Yeah, the SMB bronze bullet strategy. That's how I call my strategy because I've modified it into I've added in a lot of things. For those guys of you who trade smart money concepts in the first place, for those guys of you who trade the silver bullet, that's all part of the smart money concept. So it's what I integrated into my strategy. It has a little bit of some improvements. That's why I modified it to call it the SMP bronze blade strategy. And this strategy is based on only three things, which I'm going to show you guys here. One of the things is a sweep. Sorry, a sweep of liquidity. That's one thing. The second one is a market structure shift. Market structure shift, and then the third one is the point of interest. Point of interest. Now, for those guys who don't know about this, maybe those who are just starting with forex, you can go on and start watching these videos. Actually, this is my first live and my first posting, I would say. But if at all you don't know what a liquidity sweep means, and just hang on, by the end of this video, you'll have to know what it means, right? So this is what my strategy is based on, and you guys can see that we have when you look at its name, it's called the SMP, which is the sweep, market focus shift, and the point of interest. The SMP bronze bullet strategy. So which strategy is this? This is how it's supposed to look like. First, we'll have maybe in a bearish downtrend, we're having a market running in a down. Then we have something like this. We have something like this, and the market changes. Those of you guys who have learned about, those of you guys who have learned about, it's called, how is it called? The market makers module. You guys can know what I'm talking about because uh, th- this guy was technically derived from the market makers module, as you guys can see. So this is it. I always look for a market that is trending just like this, as you guys can see. I always look for a trending market, and I mark out a low. Just as you can see, guys, it's a trending market. So I mark out a low like this. Okay, before all this, sorry guys, before all this, oh, sorry, before all this, the reason as why I call it the SMP bronze bullet strategy is because I derived the strategy from the CRT. That's the candle range theory. So I'm going to take you guys through the candle range theory in the first place, and then I'll explain to you how it works because it helps you get entries. And after getting the entries, it will help you guys. I'm sorry for because I'm outside, so but this is it. So guys, the candle range theory, we always look at the market that is running in this manner. As you guys can see, we may have a market, a candle on a higher time frame. This candle could be on a daily, it could be on the H4 or even on the H1. So we have a candle like this. Hmm? As you guys can see, we have a candle like this. So guys, we have a candle like that, and then we're going to wait for to see another candle come in. It could be either on the up on a bearish candle or a bullish candle, regardless of what it is. But we're going to wait for another candle opening like this, and then closing within the range of this candle, right? First, before all that, we are going to mark out this candle's high like this. It's called, I always call it the candle range high. This is the candle range low, and then this the candle range high, right? So we're going to what are we looking at? We're going to look at, just like I said, my strategy is called the SMP bronze bullet strategy, right? So we're going to wait for a liquidity sweep, which is it is our first aspect to consider. So we're going to look at this candle sweeping out the liquidity. It could either sweep out the high or the low. If it's in a bullish scenario, then we could expect it to maybe the candle open from this point, so we could expect it to break this low, yeah, as you guys can see. So it breaks either the high or the low. So for this case, we can see the candle breaking a high. So immediately the candle breaks a high, then you're going to expect this candle to sweep out the liquidity, right? You're going to expect this candle to sweep out the liquidity. So when you find a setup like this on the higher time frame, it could be on the H1, it could be on the H4, or even on the daily time frame. What do we expect? What we expect is that we are going to scale down. Maybe I could say we pick this entry maybe we pick this entry from the H4. This is technically the H4. So seeing a setup like this on the H4, we look at a candle, mark out its high and its low, wait for the sweep, whether the high and the low. So when we find it swept out, it could have swept out the high or the low. So we scroll down to our entry time frame. Our entry time frame is always the minute 15. So we always enter from the minute 15, right? So we look at the minute 15. As you guys can see, M5, right? M5. So the M5, what do we expect? For the M5, first, sorry about the noise. Okay, I think it's done. To the M5, I'm just going to mark out the range in which we have been running. Which range is technically this? Which range is technically this, right? So we could say this is our high, which is the candle range high, and this is our low, the candle range low, right? Like that. So remember, we marked out the high of the candle and the low of the candle. In this case, it's a bullish candle. So what do we expect? We expect the market to break. Technically, let's say this is being the low. That means this is the lowest point of the candle, right? But I'm marking it from the week. So we could expect the market run up to this point, like this. Maybe the market has come running like this. Then it sweeps out the liquidity, which is this point, right? So the market comes down. Maybe up to this point after sweeping out the liquidity, and then runs back up. Now at this point, okay, even before this happens, I'll first consider the before that happens. Just don't consider that. So this is what we are going to consider, guys. We are seeing our market running in a very good uptrend, right? That is the candle, that the bullish candle that we expect. Maybe it's an H4 candle, just like we say it here. H4 candle. So the market has come running up like this. It came running up, swept up the liquidity. So what do we expect? When the market sweeps out the liquidity, we come back after the sweep, which is our number one, which is this one. We expect the market to make what we call a market structure shift. It's called a market structure shift, or someone can call it a change of character, right? Remember, the market has been coming, making higher highs, higher lows, higher highs, higher lows, higher highs. Now the market comes and makes a lower low. You get? So here we have what we call a market structure shift from this point here, where the market breaks the previous low in an uptrend, and where the market breaks the previous high in a downtrend, right? So in an uptrend, we have that which is called the market structure shift, as you guys can see, right? I think that's probably so not very hard to understand, because the moment you see such a setup like this one in the first place, that technically implies that you're going to have something like this. You get? Yeah. When you see something like this, technically you have already something like this. The moment you see a candle that has swept the liquidity and come back down, you scale down to the minute 5 and start looking for such an entry. You're going to see some examples on the real markets, yeah. So what do we have to expect? We expect that when the market comes back up, sweeps out the liquidity, like when the market comes and sweeps out the liquidity, the force that is going to be the momentum that the market is going to use when coming down, we expect the market to form a point of interest, that is supposed to be at around this level as the market is coming down. Under the point of interest gap, we can point of interest, we can mark out one of it could be either an FVG, which is a fair value gap, value gap. We could have an inverse FVG still, which is another good setup. We could look at something like a breaker block, a breaker block. Yeah, those are the point of interest that we can look at when you're looking at a scenario like this one, right? So you can look at an FVG, an inverse FVG, and a breaker block, right? So we expect the market to come back and tap in either in this point of interest that's here. It could be an FVG. For example, we have something of this kind. For example, you have an FVG at this point, a fair value gap at this point, like this, right? So we have a fair value gap at that point. We'll expect the market, the moment the market hits this level, then we'll have our entries. We have our entry at this point. Stop loss slightly above our sweep, and our take profit targeting our candle range low. As you guys can see, this is one of the strategies that was formed by, it's called the silver bullet. As you guys can see, the setup is the silver bullet, but I just tried to adjust it with the candle range theory just to pick up more entries. Yeah? So it's one of the strategies that are in the 2022 mentorship module of the ICT. So if you guys can go and check it out, it's one of them. So you pick out your entry to have something like that. I think you guys can see. So we can have a live example, I think, from this point. We'll go to our H4 and start looking for a setup like that. I hope you guys are trying to pick up something from this. Let me hope I'm even making some kind of sense, you know. Sometimes you may speak and speak and speak, and yeah, people are even tired of you. You get. So let me hope what I'm doing is at least making a little bit of sense to you guys. Let me hope what I'm doing is is going to be of hope to someone out there, regardless of whether there is someone on my life or not. Let me hope it will make some sense. All right, so we could go for a setup. I don't want to go very far because there are very many setups in the market. So I could just pick any. I could go for this. I could go for this. I could go for this. I could go for this one. We have our high. Which high is this one? I'll make it as our candle high, right? And then I'll go for a low. Which low is this? Which is our candle range low. This has a good setup, by the way. Our candle range low, like that. So, just like I said, we go to the minute 5. Now that I'm not having a water, but I'll just look for real. Okay, this is it. This is it, guys. So, guys, and with time, when you keep up trading this strategy, you find yourself in a situation whereby you no longer even have to find the candle range, whatever. You just look for a sweep happening and then wait for your entry, and then you're good to go. So, guys, we had this low. This is the candle range low, and it was swept. This is the liquidity sweep I was talking about. So the market went back up. I want to show you guys the market structure shift. You can see that the market was in a downtrend at this point. The market came. I always love to show it using using this guy to pick out my entries. Yeah? So we see the market came, it came down, retraced, came back down. You guys can see. Then it came and swept out this level. This is the recent high, most recent high. So sweeping out that level gives us a market structure shift, as you guys can see. So I can go back to my candles. Market structure shift. As you guys can see, the market structure shift happened. Yeah, here in the minute 5, the reason that's why I always go to minute 5 and go to the line graph. Line graph shows me best of price action than you get him. So we have our market structure shift at that level. So what we look at, we look at as the market makes a market structure shift, we expect the market to form a point of interest. It could be a fair value gap, it could be anything, right? So for this case, we can see at this point we had an FVG at this point. This is one, right? And we also had an FVG. Now, guys, I want to show you something here. We also had another FVG at this point. Okay. This is a fair value gap. I always love marking them out, yeah, to make sure that I'm not mistaken by what I did. So, guys, you can see we had two fair value gaps, right? We had two fair value gaps, but the question is which fair value gap, and the question, this is a question of risk management. So you ask yourself, how much am I willing to risk? Like, what drawdown am I willing to go for? Okay. So you may choose to enter from the first fair value gap, which is this one. You may choose to enter from this point because it came and gave us a 50% of the fair value gap, but still, even if you enter from this point, remember our stop losses must be slightly below the strip. So if you're willing to go into a deeper drawdown, and maybe to reduce the chances of missing out your entry, because sometimes it may not come to this second fair value gap, this one. But if so, our first entry, I'll mark it out so you guys can see. I won't speak a lot. We're going long. Our first entry would be at this point, going like that. This is okay, guys. Just a minute. And then our second entry could be at this 50% and stop loss slightly below the sweep. Just make it as tight as possible because this is a high probability setup. This one also like that. And what are we targeting? We are targeting our candle range high. We want to see how long this trade took. Targeting our candle range high, you can see. Remember, this is the minute 5 time frame, so the market trend so perfectly well. And boom, it hit our TP, giving us a 1 to 7, guys. Give us a 1 to 7.6 risk to reward ratio. This is really insane. If you guys can tell, it's really, really insane. 1 to 7 RR. It's insane, but yeah, that's how it is. As you guys can see, went, gave us an entry 1 to 7, perfect trade, sniper exit, and we're good to go. That's one of it, right? Stop loss slightly below, so you can, as you guys can see, you can contemplate about it. This is a trade we entered at. What time was this? At 8. At 8. Yeah, that's why. That explains the consolidations and what. Because the big move happened at London, at New York. The moment New York opened, the big move happened. Yeah. So, but it was worth it. It was worth it. You close it and sleep. Yeah, you close it and sleep, and closed at exactly 5:20. So this was a midnight whatever. So we had to go through Tokyo and Sydney session. So that's why the consolidation was so much. Huh? But that's one setup, guys. I can look at another one. I could look at another example, which in that one. Okay. Allow me to delete everything here because I think we are no longer using it. Okay. So just recently, I expect to see something like a setup that was better than this. Yep. We also have this one, but yeah, we also have this one. But let me look for one that looks even better. But that was also a good one. Yeah, that was also a good one. So we could look for another setup. It could be this one, which had the opening range gap. but the gap would just send us to TP. I don't think we could trade that one. This one, we had a sweep of liquidity to the downside. This one came back and gave us our entry, and then boom. So the gap hit our TP, but I don't think we could go for that because it was a midnight thingy. Yeah, still, guys, we could go for something else. These setups are. One thing I've been telling you guys is that the moment you keep on trading this strategy, you reach a moment whereby you don't need to come to higher time frame to find entries. You get? Yeah, you reach a point whereby you don't need to come to higher time frames. We could check out to other pairs. It could be USDJPY, USDJPY. Okay, USDJPY. All right. Yeah, USDJPY is already giving. USDJPY, USDJPY. Let me see if I try to scale down. Okay, USDJPY, you have this entry. As you guys can see, have this good one. Remember, this strategy is combined with what we call the market makers model of reversal. Market makers model of reversal. That's why, if you guys are so keen, I marked this out. The market makers model of reversal. So we have, I think I'm just going to go through this so quickly. Okay. This is our candle range high, and okay, I could go for the candle range low, which is this point. Okay, I'm going to adjust this just for better vision. So this is the candle range low. Guys, this is my last example before I close off the whatever. Before I close off my live, because technically it's only me on it. But so this is it, guys. We have this setup. So we scroll down to minute 5. The only problem I'm having with this thing, yeah, is when you back testing stuff, you always have to wait and actually I took a trade using this very setup. Wow, it was so fine. I'll first close off the whole of these because I need to have a new thing. Okay, so guys, we have our candle range high. Where was it? Like, come on. Let me first go back to H4. Okay, yeah, guys, as you can see, I've always marked out my market makers model. Okay, I think it wasn't the one I was going for. This one was a different entry. Yeah, by the way, it was a different entry. Sorry. Okay, I'll go back just slightly. So it wasn't this one. This was a different one. As you guys can see, I've always used this thing to make money. This very same strategy. I've always used it to make money. Hope it's this one. I'm not so sure. No, it's not this one. It's not that one. Okay. Guys, sorry I didn't clean my chats before, but it was all just for the case. Actually, this was a video I was making some time back with my friends. I was trying to teach them about my strategy, and they were so happy about it. And most of them are using it now for their trading. Okay, guys, I think I can use this one because the other one, my plan doesn't allow me to have a trade from it. So first we can go for this. Where is it? Where are you, guy? Where is this guy? Where is this guy? Okay, so guys, we have a setup like this. In the first place, I mark this as a candle range high. Okay, this was supposed to be a candle range low, not a candle range high. Guys, I'm sorry about all the imperfections. This is my first live, so whatever is happening, so guys, just bear with me. Okay, so we have a high, which is more so like this one. Okay, have a high, which is that one. So we can see that a sweep happened, and then getting back to the line graph, you can see the market came high, low, sweep happened, low, it came and swept out the previous low, which is this one. Technically, the previous low was this one. This was our previous low, right? So the market came and swept it out, giving us a market structure shift. This thing is very hard it's very hard to spot when you're what? It's very hard to spot if at all you're not trading from, if you're not using the line graph, but if you are, then that's a good spot for you. So what do we have to look at? We have to look at a point of interest. Which point of interest would it be in this case? So you can see how the market played out. The market came back down, and first and foremost, the market gave us an FVG, right? The market gave us an FVG like this. Someone could enter from that FVG, but then remember, we have to look at something. Just like I told you, your risk management also determines, but you can see that we have another block. We have another block, and perhaps we still had a partially filled fair value gap at this point. I think you guys can see it. It was partially filled, yeah? I'll change it. Okay. It's okay. We had a partially filled FVG. So I think this partially filled FVG would be the best entry. However much you have this, so you could enter from this one in the first place. As the market came, you could enter from this point, but then you could go into drawdown for some time. But then we have a partially filled FVG at this point. So I think this would be our entry zone, and we could make our entry the moment the market hit the FVG. The moment the market closed this FVG, because it was partially full, so it had to fill it to the brim, and stop loss just slightly below. It could give us over 1 to 2, 2.6, 2.7, 2.8 just to lower ratio. As you guys can see, this one was a good one, and I took it. Actually, I took this trade. It's the one I deleted at time. So you just get a trade like that. This is a trade that is giving us over 31 pips, and that's a good trade. For starters, it's a good trade. Yeah. So guys, basically that's it about my strategy. I just want to give you guys a few words. One thing is that, guys, regardless of what happens, just never give up on yourself, right? Yeah, regardless of what happens, if at all you trust in what you're doing, just make sure you always go for it, because one thing you always believe in is one thing that is always going to pay off. Yeah, guys, I don't know if I have this guy. I want to show you this very trade that I took, because I have a screenshot of it. Let me see. Let me just see if I could get it for you guys. Just a moment. Okay, I think it's not right now, but then I'll share the pics with you guys to show you how the trade was running and how it hit my TP. It was truly a perfect trade. Yeah, that one. How much it trained low and low and low and low, as you guys can see up to this point. But as I was saying, guys, don't give up on yourself. If I told you chose to take a path, there is nothing like an easy path. It will always be so difficult, but all you have to do is to keep on, is to fight, is to keep studying more. Forex is really so stressing. So forex is actually, it's going to make you so lonely, and people will think that you don't even like them, but then you do. You get. So guys, just be yourself. Just know we are going to make it. When it comes to the market, just know guys, we're going to make it. For those guys who get a chance to see my video, I just pray one thing, guys. Please help me and subscribe. I have 0 subscribers, but I'm making my videos. So guys, just help me subscribe, and yeah, just help me subscribe to my channel, and God will bless you. That's all I can say. God will bless you. But as of now, I think, guys, that's it. I had it's it's 1842. So guys, I think that's it. My name is Benjamin Kaisube. I'm a struggling forex trader, just like you. So you just don't have to give up on yourself, guys. Yeah, you just don't have to give up on yourself. Just make sure and I'm sure we will make it, guys. I'm sure we are going to make it. Maybe not today, maybe not tomorrow, and maybe not like the next month. But only one thing is true: we're gonna be champions one day, guys. Always don't forget to pray, put God first, and everything will work out best as we expect it to be, right? So, guys, thank you for watching. Thank you for those who are going to watch it even afterwards. Thanks to my mama. She's my number one supporter. Yeah, guys, I sign out and good night. Yep.